here is the gold market. So we have a mess here when you look at that, right? You had this double top, the panic in the market going on, this big decline right over here from 1718 all the way down to a low here of 1462. This is a flight to cash, a deflationary scenario that pushed our dominant cycle shifting over one full minor. So these are the minor cycles right in here. And now with this rally in the shape of it, we have definitely entered into a revised situation where we have this big rally that took you all the way back up to 1713. 1718, 462, 1713. That makes this only a rally phase that is only a week old. We're consolidating sideways in here in this minor buy zone. This level right over here around 1606. This level here around 1638. In our opinion, this is a consolidation and we're going to get another spike up to this area. The intermediate patterns have suggested 1725, so we think it is a buy. And we think that it's likely to move up strongly to that 17.25 area very quickly, and that's based on the government trashing the dollar in a massive way. They don't care about how much they print if they can save the world, no matter how much it'll cost the world moving forward. So that it means that they're going to print and print and print and print until they're done printing, and they think that they saved it all, and they stole all that money from anybody who's a saver, anybody who wants to be able to buy something with $1, and anybody who is a child or grandchild of who I'm talking to right now. They're stealing money from them right now, and the gold market is likely to respond to that. It's a safe haven security, and you could see it acting that way, and this pattern has become very positive. So we're looking for a rise to 17.25 plus in this next 1 to 3 weeks, and then correcting, and then this rally over here could very well be 1800s. This is right now the probability's changed to a very strong condition that we see in here. The momentum, look at that green arrow, slim ribbon turning positive. Projection oscillator not even able to tick down at all in this little corrective area. So QE Infinity revised this, and that means that we're likely to see gold moving up again. You can see the buying coming into the stocks also in the gold market, but not quite reflective of what I see here, and that's because the gold market and in the stocks, they're subject to the liquidation in equities, but not so much in gold. Remember, gold has got a physical shortage going on right now, so physical gold a lot more valuable and a lot more desirable than paper gold right now. So it's going to take much more of a rally, I think, in the gold market to get the gold stocks to really get pumped a lot more. And actually think that's coming. So there's a pretty good potential for that. Some of the evidence between the backwardation, the amount of printing, the hoarding going on, mine closes, is that there's an upward resumption very likely. Momentum turned positive here on the short term. The intermediate term is still negative after having this big decline. So it's got some repair work to do, and we think it's going to be turning up on the other time frames also. So that is a look at the gold market, which we think is getting ready for one more or many more upside spikes. Watch for the impulses to give you the information, and for the momentum, you had this big negative impulse and momentum turned negative, the big positive impulse and momentum turning positive. This is a very rare occurrence right in here, and I believe this upward momentum is changing very significantly.